think we are.
Robert, you're on mute right now.
I was waiting for the music.
Oh, the music already went, I guess. I mean, I don't know if you have problem with the
All right.
internet. Yeah, so the music is gone. Robert,
okay, well, here we are. Here we are. Welcome to this week's edition of Analysts Gone Wild. We always try and have a great intro. I must have missed that, looking at something else. But here we are with episode 8, Robert Kramer with more insights and strategy. I'm here with the team, and we're here to analyze some really good things going on globally. So why don't we, before we get started with our first story, why don't we kick it off with Duncan? And why don't you introduce yourself, and then we'll go around to Brian, Thomas, and Sam, and then hit the first story. Duncan.
Thank you. Well, good morning or good afternoon if you're in Europe like I'm. I'm Duncan Chappell. I'm research director at Sage Circle. I've been in and watching the analyst industry for about 25 years. Super happy to be here today.
Thank you, Brian.
Hi, I'm Brian Jackson. I'm with Infotech Research Group, a principal research director there. I develop tech trends and CIO priorities. Glad to join the panel today.
Great. Thomas, welcome back. Good to see you again.
Thank you. I'm Thomas Ebernight. I'm independent, mostly CRM, CX focused consultant and analyst out of the beautiful Pacific Northwest region. So good morning.
Great. Thank you. And Sam.
Yeah, Sam Gupta, principal at Elevate IQ. Elevate IQ is the analyst and advisory firm. Our focus is enterprise software. Robert, over to you.
Great. Let's go to our first story, but I want to welcome the guests that are, joining in our live stream to thank you for that, but also to weigh in with questions so we can discuss those as we're going through the stories. And ERP is a big topic always, right? And Acumatica covers the small to medium-sized market, and they have specific industries that they focus on. And they are putting AI, is like most other companies, is one of their larger product strategies. And I'm pretty familiar with Acumatica, and I obviously feel that they're doing what we would expect. I'm not sure this is anything new, but we always want AI-driven automation. We want tasks to be, more governed by the humans and the robots together. I think there's a problem if we, just from a perspective of mind, that if we don't combine and we only want to do AI automation, but the interactive AI assistants are a big thing as well. But I think this is kind of par for the course. They have a pretty significant larger user base with the small to medium-sized marketplace. Anybody want to weigh in on this? Thoughts? Anything unique here?
I'd just be interested here to know a little bit more behind the scenes of this AI first strategy, right? Because we're hearing here Acumatica is saying, okay, we're here, we're doing this thing that all the other enterprise software companies are doing with AI agents. We're going to have intelligent automations built into the ERP. I mean, it's what you want to hear, but give me the behind the scenes, give me a little bit more depth on how you're building this technology. Are they partnering with an AI company that's providing the LLMs here? Are they using open source tools? I'm just not seeing the sort of details to really give me the full picture of what technology tools are they leveraging to input this AI into their ERP.
And they do have a large user base that is their user group that they've gotten a lot of this information from as far as what they want. But this is all features, not necessarily business impact. So that's a point to make as well.
They're ticking all the right boxes, right? That one needs to tick these days. So intelligent advisor, anomaly detection, which is fine, which is important. Automatic categorization, interactive and AI in one sentence. So I'm with Brian there. So what do they really need? Of course, I want flexible workflows, but in how far is that different from what? Well, we have IFS later as well. What they are saying, or what SAP is saying, what Oracle is saying.
I think it can be. I mean, you're right that they are playing all the words that they need to do, and obviously that reflects the reality that they need to show everybody. needs to show more integration across their platform. I think there's also something that's specific about going into the mid-market like this, that on the one hand, it reflects AI becoming a really standard part of business software, that acceptance inside the mid-market. But the challenge is, I think that mid-market organizations are often more interested in having AI enabling the human rather than saying AI first. Yeah, I think in many mid-market organizations will hear the phrase AI first and think that it means human last, and that it's talking more about efficiencies than about growth or about improving quality. So I think that their language speaks more to the investor community than to the mid-market at the moment.
That's a good point. When you say enabling humans, you're meaning the collaboration like an Industry 5.0, where they're working together from a strategic standpoint. The manual tasks are done, but the strategy's done from the human perspective. Because just there's cases out there, so even specifically in the healthcare, where Anthem was rejecting all these healthcare claims because they were all being done by automation and AI making those decisions. So I think it's imperative that the human is involved on the higher task, or more, I guess the larger ones that need a human to okay it. But Sam, what do you think? Or
so this is very interesting. So I'm gonna have to agree with Brian's comments that obviously we need more details here. But overall, if you look at the size of the company Acumatica is, I don't think they are going to have appetite to develop any sort of LLM technology. So for the most part, I guess they are going to be consumer, just purely looking by the size and the appetite they are going to have. Now, there are some other comments here. So first of all, this is the 2024 R2, and they are saying anomaly detection. And in my eyes, I don't think that is the generative AI use case. So right now in 2025, everybody would expect that, they would have something related to generative AI. The whole interface is changing, the whole interaction is changing. And they had sort of disrupted the market with being cloud native. And now we are not hearing the generative AI team, agentic AI team, which is very interesting because they should be the first one. If they are really innovative company, they are not doing that. So legacy vendors are actually ahead in the generative AI game. So that's probably going to be my take on this story. But again, when you look at things such as invoice categorization, case resolution, maybe that has a little bit, but it's still it's not generative AI at all. To be completely honest.
Summary
regeneration. That's the one.
But I mean, you can have AI without it needing to be generative AI. I mean, definitely, I've seen generative AI applications of predictive, like fault detection, fault prediction, predictive maintenance. But what is more compelling is to make it agentic. So you're proactively driving workflow, and I think those surely must be the sorts of advanced capabilities that they are thinking about, rather than simply activating LLMs that can chat with people.
Just overall, it feels like an announcement that's playing catch up, right? They're saying things in here like, oh, other tech vendors are prioritizing speed over substance. So I guess we're assuming here that Acumatica is giving us the substance, but where is it, right? There's saying the new UI is coming. We're working on this interactive AI assistant. So this is an announcement. We're not seeing it yet, right? It just feels like they're acknowledging, they're trying to create the illusion that they're on this AI bandwagon and that we should expect better things in the future.
Yeah, so it does not seem to be very AI first product strategy is what my take is going to be on this. The AI behind right now.
Yeah, I'm trying to find a closing remark to this, but I think that they're doing what they need to do, but they need more information here. But what would you guys think what areas, I think, like the purchase order automation, they need to have more from a supply chain, supply and demand inventory. I mean, I see those as the hot buttons for AI, not necessarily these that they have listed on here. I'm not sure what you all think. These are kind of a lower end AI from my perspective, not the ones that I would see as the top of mind that I would need from a manufacturing perspective.
Yeah. Correct. And looking at Leonard's comment there, I think AI first is one of the next things that I need to get into one of my enterprise buzzword decoders. It's a BS marketing term, sorry. So it's not AI first, it's about results first.
Exactly.
Not about AI or social first or whatever first we had in the past few years.
Yeah, but Robert, to your point, I guess, if you look at what Salesforce is working on right now, and they are obviously very aggressive in marketing, but they are also equally aggressive with their product as well. So they have shown how AI first product is going to look. And that's a very compelling, argument there. And that same thing has been done by other ERP vendors as well. For example, Epicor has shown a real demo. I don't know when they are going to deliver. Demo is a demo. But they have shown at least the promise.
Do you feel, though, when companies do that, who are they marketing it to? Because when you look at Salesforce, just as an example, how many companies are ready to use their AI because of their data perspective? I just think that they don't showcase that up front, that, hey, you need to be on these versions, your data needs to be at this perspective, because if that data is not at a certain level, it's not going to be useful to have those features. And so they're showing the shiny red car, but I can't drive it because I don't have the money to buy it. So I'm just talking about from a data perspective. I wish these companies would spend more time talking about data and what I need to have in order to actually take advantage, because I think it's obviously an anti-sale or sell situation, but I think it would make these customers less antsy and more trusting, because when I go to these events, the customers are a little shy about investing in modernization because they see these new features, but they're not sure how I can even get there, and nor do they want to cross that bridge yet. Anyway,
I think that's really positive. I think it also shows that that actually some of the most successful AI implementations in mid-market manufacturing are still on-prem, exactly because people are very concerned about that. And I think that there's especially strong if you've got some market niche where you've got like very deep industry expertise. Like I'm seeing people rolling out AI automation in like semiconductors, food and beverage, luxury. If you can find like a niche where you've got a defensible amount of industry expertise that could be multiplied by the AI capability, then that can drive a lot of efficiencies. And mid-market organizations are often full of inefficiencies. So even relatively elementary open loop can still drive huge improvements.
Yeah, that's a good point.
So guys, when I was talking about cloud, I guess I had coined the term, fake cloud. And John Reed is probably not going to be comfortable with the word fake. He'll use Fox. But I'll continue using my fake word. Okay. So I think we need to introduce fake word for AI as well. Because if you talk about the real AI, and Robert, to your point, if you look at the real world use cases where it is being used, I was tracking one company called Gorgeous, and I don't know if you guys are familiar with them. They probably have more than $1 billion valuation, part of Shopify's ecosystem. Anybody who's going to be part of that ecosystem is probably going to be burning hard right now. Okay. And in their case, they have already marketed AI, even though they don't have any AI in the background so far. As far as my understanding goes, they are plain macros, but they are selling, they are pricing, customers are buying, thinking that they are getting some sort of AI. So that's a great use case that the marketing is already done. People are willing to buy, because I'll tell you the use case. So the use case there is you are going to get like 1 million product questions on e-commerce. This is like a $10 deal. So you cannot have a sophisticated guy like Thomas who can be in customer service there. He's very expensive, right? So, so how would you do that? And that's where the AI is really good, at least the agent. And customer service is going to be just one of the areas where you are going to see the maximum adoption. And that's what even Salesforce is focusing on. So there are use cases of agentic AI. They make sense. And I think customers are going to pay.
Well said.
Second story?
Yep, let's do it.
Okay. We have some comments here if you want to do comments first.
Yeah, let's do that.
Okay. All right. So we have Ken. Hello, Ken. Thanks for joining. We have Leonard as well. Thank you so much for joining. One comment from Leonard.
Well,
Yeah, so Leonard likes to connect. I mean, he's a networking guy. So guys, drop your LinkedIn profiles. If you guys are listening to this, it's always good to connect with the community. So please do that, everybody. All right. So this is a long comment that is hiding pretty much everybody. I don't know now. I think the StreamYard video widget is not scaling. So he's saying, as far as the term AI first is concerned, I have understood it as a company-wide use of AI augmenting human activities and working alongside humans, dramatically increasing efficiency. I have heard Capital One is a good example of that. I think that Salesforce firing so much of its customer service team, thinking wrongly, in my opinion, that AI will substitute them is a poor use of AI and will harm the company. Comments?
Well, they claim that they have an 83 or 85% automated closure rate via their help site right now, since they put it on, how do they call it? Agentforce. So may or may not be wrong for them.
Yeah, we have to recognize that when we say AI is going to augment human capabilities, that means that humans are doing more than they did before, right? So if Salesforce is releasing some of their customer service team, I guess they're confident that customer service inquiries are not going up, right? Because if AI helps this a human doing customer service handle more inquiries, and why do you need as many humans now, right? So maybe we're not replacing humans, but do we need the same number of humans to do every function? I think we're kidding ourselves if we pretend like some jobs aren't going to be eliminated, because the demand for things has its limits.
Leonard has a point, though. But that is more criticism of capitalism. Means nothing we should dive into now.
Well, I'm happy to criticize capitalism all day.
And I do think that what Leonard's comment suggests is, I mean, for a company like Salesforce, obviously it's working, right? I mean, they can do more with less, but then there'll be some customers who won't like that. And so then this opens opportunities not only for Salesforce to improve, but for organizations with different customer service strategies to succeed with a niche of customers who want a more human-first approach. So actually, everybody wins with that division of labor. I mean, apart from people who get laid off at Salesforce, but if people are intelligent, they can fit around the companies that go AI first too brutally, and human expertise supported by AI can then produce more opportunities for people to differentiate from their competitors in the market.
It depends on the industries, though, right, guys? And it depends on the personality of the companies and the innovation aptitude as well.
And what one needs to say, and that goes into Robert's point, Salesforce has a pretty darn good data foundation through their data cloud. And that showcases what is possible. Basically, the art of the possible. And actually also probably pushes the envelope. So it's good to eat your own dog food or drink your own champagne if you also want to sell it. And this shows what is necessary and what is possible.
Yeah, so I'll keep going on the comments. So here Leonard is saying, also, as I said before, many companies are claiming to be AI first. So not to seem that they are behind their competition exactly. That's what everybody does. I mean, that's the buzzword. Even the customers have started looking for this. So they all need to incorporate that as part of their marketing, regardless of whether their product is ready or not. No comments? Okay. Okay. Ken is saying, thank you for being the standard bearer for data, Robert. It's an essential part of, that's right. More comments? No?
Even more, it's not an essential part, it's the necessary precondition.
Yep. All right, so if we don't have anything else, let's go to the story.
Great. Yeah. So Advantive ERP company buying Commerce Vision. So this is another situation. I believe we've talked about stories like this where they're adding a company to give them, you build, you buy, or you partner. They're buying the technology to accelerate their journey, I would believe, from an AI automation perspective with e-commerce. It gives them a lot of different automation opportunities, specifically within the purchase order automation, which I think is a huge component. I'm not terribly familiar with it. With Advantive, you might be more, Sam, but as far as what were their procurement issues or their transformational issues that are having, that you feel that this is a good purchase or not?
Yeah, so I'll provide some context here, guys, if you're not familiar with them. So number one, they are brand new in the ERP market. They are just born, literally like a year ago. Okay, and how they are born is, and this is the consolidation play. That's very common in the enterprise software industry. I don't know how much you guys understand this play, but Constellation software, on Wall Street is one of the hottest names right now. And I don't think they have done any innovation whatsoever. Okay, it's called financial innovation, and which is okay, and that's how companies make money. So what they generally do is they are going to acquire every single mom and pop there, and they are going to roll into their portfolio and going to create major brand. And generally, they don't necessarily rewrite the software. Their goal is going to make as much support money as possible, and change the sort of model that the mom and pop is going to have. So Advantive is a very similar story, but this is not the first one in the ERP space. Infor was the first one who started this game, I guess. And then every other company followed. Epicor, PCI is the same. Who else?
Infor acquired or merged. What was it like? There was a lot of companies, so it wasn't a small amount, and then they were born from that. But is this company? What is their ability for the runway with the competition that they have?
So this is backed by like real large private equity companies, and they have a mission to literally acquire every single company on the face of this earth. That's how they are. Okay, so they are trying to integrate. Generally, they would acquire some sort of iPaaS, and they would connect all of the software and trying to sell as ERP. So their strategy is to find niche software in very small industries. For example, fastener is one industry where you are going to have very unique commerce play, very unique ERP play, very unique CRM play. So they are acquiring all of these, companies. For Advantive, they are consolidating QMS, they are consolidating SPS, they are consolidating ERP. Obviously, they have a little bit of supply chain WMS play as well, and then now they are rolling the e-commerce as well. So this is a major consolidation, I would say, but it's very similar strategy as ECI. What ECI is doing, ECI was always very commerce focused as well.
It was just go ahead, Thomas.
I wouldn't say it's major because both of those brands are fairly niche. The strategy is not unheard of. What I find best of it, and that might be me being a citizen of a down under country too, this brings down under into the limelight to some extent as an area, a region of this planet that actually has considerable innovation. So it's both Australia and New Zealand there, which is underappreciated because of, both countries being sort of far away.
Don't you feel, though, to go with a company like this from an ERP perspective, that there has to be massive trust? I mean, if I had a large manufacturing company, I'm not sure I would look at a company like this without the long-term, clients and user base and innovation that's acceptable to me. I mean, I don't want to be a beta company for this. I need to be on a major thoroughfare, highway to go that way. This is my opinion.
Don't start with the two big ones. I've seen that a couple of times with
it goes on trust
with European consulting companies, right? So they start as an umbrella company, and they are building a bunch of, or acquiring a bunch of niche companies, and they are starting on the SMB market and then are growing up from there by building their brand. So that works. That works.
I think there's a lot of major things that go with buying an ERP company, buying from an ERP company. I'm not sure that one that's only been on the market a year fits the void of what I need. But anyway, Sam, what do you think?
So generally, Robert, in my personal experience, the kind of companies that these guys are buying, okay, they are going to be relatively small. They are not as big as NetSuite or Acumatica. So the way this works is, as soon as they buy, most customers are not happy, and the reason why they are not happy is when a software company is going to be mom and pop, they are going to go out of their way to fix the bugs. They are probably working over weekends, spending their sweat equity, I guess, in that, right? But then when a private equity company acquires, they are doing nickel and dime. And these smaller companies, they just don't like it. They don't appreciate that. They are not going to get the kind of support. But from the private equity perspective, they are going to feel that, these guys don't know how to run a business. We know. They know how to write code. We know how to run business, and they are feeling that they can change this. But software business is slightly different. But again, I don't think anybody can compete with the large private equities, and that's why this model is really successful. I don't know how good this is from the user perspective, from the customer's perspective, but the model is really successful because when you are competing with the likes of Oracle, it's very hard for a smaller, software firms, and that's why this model works.
And they need to be user-friendly or customer-friendly ultimately. I mean, it's a private equity company. They are not investing into other companies just to disgruntle existing customers, but to make more of them.
But also, isn't it like the classic roll-up problem of going to market? Like if the fact that they are adding on different markets rather than similar solutions that they could sell to already captive clients, yeah? Like imagine if they had like a manufacturing execution system, and then they add onto that a procurement system that the same people can buy. They add onto that supply chain planning that the same people could buy. They add onto that orchestration that the same people could buy. That's easier because you can sell more with the same sales force. What this looks like is, they're branding out into different vertical markets, dental, safety, and so on. So where do you build out the additional go-to-market expertise? Where do you build out the additional market? How do you get the additional awareness? I think it's a lot of heavy lifting to do a roll-up where you don't have synergies between what you've already got in the portfolio.
Yeah, that's
And
sort of.
You can get away with it anyway. You can get away with it in Australia because there are certain barriers that mean that people prefer to buy local rather than US software.
Just looking at it from that private equity firm standpoint, that's putting together these companies in a portfolio, they could have quite a long-term vision here, I think. And just looking at it on its face, right, you've got two types of synergy here. You've got the regional synergy, where you have a North American company that's adding a presence in the Australian market, right? So you're going into a new geography, and then you're bringing in those niche verticals that Commerce Vision is strong in, and you can bring that competency over to North America. So they might not be thinking about how much work it is and all the heavy lifting that's ahead of them necessarily, but that'll be for the people, the managers that they hire to figure out. Right now they're just looking at, like, on its face, this is complementary, and that's enough for the investment.
Sure. Yeah. And I do agree it is complementary, and I do feel that the purchase order automation is a significant part of ERP that is usually a problem area. So they can help that situation. But Sam, I'm not sure if you have any thoughts on that, but I do feel that one of the next things after the procurement is the supply chain and the inventory control, that those are big areas for automation. So we'll see where they're at with that going down the road. But Sam, any closing thoughts on this?
I would say, this is just a consolidation strategy, and it does work. Again, the market has seen many companies. From the investor's perspective, this is definitely gold. There has been at least 10 different companies in the enterprise software space. They have done wonderfully well without doing any product innovation.
Great.
Okay.
Let's take the next one. Yeah. Okay. So Appian. I'm not sure if you're all familiar with them. I am, and they have a really interesting, business process management, platform, and they've enhanced their their data fabric to have more capacity, to have more AI, to have I guess more record types. But the thing is, I've actually spent some time with them, and I feel that they're doing the same thing that they've always done. I think what they need to do is kind of branch out. This is just technology enhancements, but as far as going a little bit further away from what they're usually doing and getting more into different markets and using their software for other things besides what they're used to, their standards, I think is a big thing. And I'm not seeing that. And I do have some examples that I'll give after you guys weigh in. But I think this is great, but these are just features. I'm not sure if you all think beyond that or not.
So I'll start, guys, if you don't have anything on this one, I guess. So I'll give you a little context, I guess. And I don't know, Robert, you probably might know more about them since you're working closely with them. But my understanding of them was that they started as more of the no-code, low-code platform.
Yep.
And 90% of the low-code, no-code platforms right now in the market, even though they are going to argue that they are the most cutting-edge technology, but they all are searching for their identity, I guess. So everybody's sort of trying to fit in, where they kind of fit in the market. Some companies have become more of the CRM players, just because nobody's going to develop all of these processes on a no-code platform, even though they are always going to argue that that's the case. But what is really interesting for me in this particular story is, number one, they are doing data play, which I wasn't sure if they were so deep into data. And if you look at their customers, I think that was noted in the story as well, that they are the platform for a lot of tech companies. That is something I didn't know. I was thinking that they are more, I have never seen them in the ERP market, even though they are going to have a bunch of logos. So they are not necessarily present in the ERP market, which is the bread and butter for most of the low-code, no-code platform. So they are not there. So where are they? Maybe bank, insurance, finance, I don't know. So that would be my take. This is very interesting move that they are able to do this kind of data management from the data fabric perspective. It's commendable.
It is, but what is new besides introducing the features? Like, how does this change their strategy? I wanted to see that. I wanted to know how they're using, how they're differentiating themselves with business optimization, how they're using the low code, no code to define themselves, and how this makes their platform different. That's not shown up in here necessarily. They have a lot that they're doing with the government, a lot they're doing with compliance and HIPAA, et cetera, and the public sector. And they have a lot of things from that perspective. The ERP is a big component that they could showcase a little bit more, like you're saying, but there's a lot of room for growth there as well.
Yeah, I'd be curious to know, how, you say what sets them apart, what makes them different, and I'd be interested to hear from you guys here what you think about this approach, because you notice how they talk about composing the data fabric. It's not like they're throwing the unstructured data in there and then trying to interpret it with the generative AI, right? That's not what they're saying. They're saying we're going to process your raw data for you and store it in a structured format into the data fabric, and that'll maybe lead to more deterministic processing, less hallucinations. That's what I'm thinking there. So that's what I'm reading into it. Is that a point of differentiation here in how they're using generative AI in the flow of data, or is that looking too much into it?
Brian, I think it's a perceptive point, because I think that the weakness of the way that they're explaining it is that it does sound like it's just more but faster, but absolutely embedded in it is the idea of there being a different data structure that they're creating. And then for some buyers, that opens up questions about like data harvesting, data privacy, the transparency in the model that is being used. I think from my perspective, what's really missing though is like a clear outline of the business benefit, right? I mean, they talk about some positive beta studies, but all I'm ever looking for is how much money is this saving me, how much quality is being improved in this way, and what opportunities for business growth does this enable? And without these stories, it's more and faster. And I'm completely in favor of more and faster, but it's not compelling for anybody.
Yeah, the only hint into that is the quote of this Groundswell director. But that heavily hinges on the expectations that he had.
Yeah, I mean, their claim is they solve the most complex processes, that they want to, and then they're solving them within the industries that I mentioned, but also procurement, onboarding, the service areas, case management, claims. But what I was saying before is they need to branch out with this additional technology or this newly released technology, because I think that they have a lot more they can offer with their business optimizations that they can do. That was really my point.
Yeah.
So, and I think that they don't really identify what markets and strategies they're going to do with this updated technology.
Yeah. Really, on a very high level, this appears to be an announcement that is similar to that we should say similar about as we did for Acumatica. To some extent, it's also a catch-up.
I think potentially what is hidden here, the other way that they could be taking a more, evangelistic point to say that that this process of building out more data, being able to use more data, being able to consolidate more data, being able to expose it more, being able to look at more patterns in more data, not only helps you to do what you're doing now, but it puts you in a better position for the next time and the next time. Any effort put into data hygiene for today's problems eases your whole automation journey, your whole deployment of AI in the future. So I think that element of just like stronger foundations, that's another angle that they could have here. It sounds great, doesn't it?
Yeah.
But it's just not a very well. It's just they're not really telling the story, right? They're just opening the cupboard and there's a photograph of the ingredients in the cupboard. You've got no idea exactly what the recipe is going to make.
Yeah, and there's nothing said about it. Just ingesting faster. This is what's written there, or ingesting faster than before, than as a corollary, probably.
Yeah, it reads to me like they may know exactly who their buyer is in the enterprise. If I'm giving them the benefit of the doubt, they're saying, look, we're selling to the chief data officer here. Let's just communicate the speeds and feeds of this, when they'll be able to translate the business value of it. But that's to give them a more optimistic interpretation of what they're telling us here.
But it's just Benjamin Franklin, believing that people will beat a path to your door. I think in this market, with so much hype, you have to be able to tell a better story, and you have to bring it down to business benefit.
Yeah. Okay. Sam, anything closing? Should we go to the next one?
Yeah, I guess, I don't necessarily have, much background into the data fabric market. Robert, you are probably going to have more, and I really wish that John was here. He tracks database market, and I don't know how true this claim is, and, that the technologies that we have in the market don't write beyond 2,000 rows per second. That seems notable and commendable. So I don't know. I mean, there is something to the story. Maybe they have done something commendable here. I just don't understand that market.
Well, they also have some major competitors with Pegasystems, Salesforce, ServiceNow, and Microsoft. So they're definitely they're doing what they need to do, but we don't know what it's supposed to do for the business impact for their customers, and I think that's what we're missing here.
Yeah.
But Salesforce is not necessarily in the data market. They are claiming that they are in data market, but they are not. They are not. I mean, these guys might be competing with IBM. They were trying to buy Informatica, then maybe they would be in data market, but right now they are not. So that's where I guess if you look at the core data fabric, data warehouse technology, you are looking at Salesforce, Databricks, these companies, not Salesforce, Snowflake, sorry.
Well, I'm not sure about that. Salesforce, it's depending on how you're using it, but it can be considered that with their data cloud, but that's a different discussion. But let's continue on. I heard there was, Brian, you were talking before we got started here that the Boston Celtics got sold, and that they're going to be crunching a lot of data because of the sale of $6 billion from somebody, just to kind of change up the stream of events in this episode. I mean, does anybody care about the Boston Celtics, or does everybody care? What do you think, Brian? What's your take on the sale?
I care about them in the sense that I'd prefer to see them lose, but this is a significant.
Oh my God.
This
Same
is a
here.
significant development in terms of like ranking. Anytime an acquisition is made, and thanks for bringing this up, by the way, Robert. But anytime an acquisition is made in the sports world, like it's interesting to me to see like what's the valuation. How does it sort of measure the growing valuation of pro sports, which has been growing enormously over the past decade. So look, the acquisition here is Bill Chisholm. He's the managing partner at Symphony Technology Group. The report is $6.1 billion from ESPN there. So that would put the Boston Celtics as this is the fourth most valued NBA franchise behind Golden State Warriors, New York Knicks, and LA Lakers. So it just goes to show you, look, what's this guy doing, right? What does it have to do with his software company or his private equity group that owns CAI, that owns what else? RSA, other technology firms, Avid. But not much. I don't know. I wouldn't really worry about the synergies of that so much as just like acknowledging that Bill thinks that a pro sports franchise is a good way to preserve some capital and see it grow into the future.
Are we there?
Any other Celtics thoughts, guys?
Well, they have a great team, obviously.
Robert, do we still have you?
No.
Yeah, so
I
I guess.
have a thought on that?
Robert.
Go ahead.
No, you are losing. Go ahead, Robert. Now you are here.
Now I'm back. I'm in a unique place.
That was actually the AI lie detection cutting Robert off for making his fun. He was talking about the great team. And it's just like, okay, let's stop that there.
Yeah. So, no, I don't have another comment. I was going to say that there's a lot of technology going around in sports. It'd be interesting to see how this plays out. If it's just a personal purchase or there's a play from a perspective of executing technology.
Yeah, well, he'll be looking for that opportunity for sure.
Yeah. Okay. Well, this next slide deals with something that's probably very close to all you guys as well, which is dealing with what we've been talking about, where Deltek announces some enhancements. I'm not sure this is more of a data play or anything more than that, because they're bringing historical data in, which I think is a huge component to all these systems. But does it do anything more? And is there anything needed to be ready for this data, or is it just a standard feature? Sam, what do you think?
Yeah, so I guess I'll give you guys a little context here on Deltek. So I don't know how much you guys know about them, but they have been in the government contracting space for a very long time. They have probably one of the largest market share in that space, and primary reason being is because of their proprietary data. Now, data is a tricky game. If you look at any of the supply chain suites, the reason why those companies are really successful is because they can provide the kind of data. For example, let's say if you look at analyst firms like Gartner, Forrester, the reason why these companies are powerful is because they have data that none of the other companies have, and they use that for benchmarking. And that's why Deltek is really powerful, because you need this data to be able to quote for your RFPs, to be able to win the deals. So that's what makes them powerful. Now, where do you draw the line between ERP? Because they are selling this data pretty much to everybody. And now, that's embedded as part of your ERP workflow as well. So I think that's a news. But again, the data is coming from the vendor as opposed to the independent party. So some people might argue there, I guess. But that's the secret sauce Deltek always had. Now they are sort of integrating these workflows as part of the platform.
What were the companies doing before this? Just not having it, getting it from a different vendor, or getting it from that vendor and doing it in a different way? Like, what makes this so top of mind?
So this particular news is going to be integration with the platform. So earlier, they had data, in two different applications. So data application was different from your ERP application. Now they have sort of clubbed them together. So it is going to be part of your workflow. That's how I am reading this story.
Yeah.
Right, but you're saying, were they doing it before outside of the system, and it was a desperate situation to bring it in, or it was no big deal, or somewhere in the middle?
This varies a lot from industry to industry. I think like I'm thinking of the semiconductor industry, people really want to be able to share success stories with their peers, but they are not in a situation to share any quantitative data because they're in a very competitive market. So I can see one of the advantages of what Deltek is doing is if it's able to know enough about what many clients are doing that it can anonymize that and sell it back to people, then that is valuable. I must say I've seen situations where so what is happening normally in companies is that they're benchmarking against their own historical data, but you may not know if you are like an outlier in regard to other organizations. I do think there's a danger that benchmarking can become a tool for conformity and it can stifle innovation, because in a way, efficiency is often driven by scale. If you're a small organization, you're never going to get up to the benchmark, you might give up. If you're a large organization, you're way above the benchmark, you can coast, you may not realize how good your closest competitors are. So again, I think it would be interesting to hear examples. For what organizations is this really fostering competitiveness? For what clients could it foster a herd mentality?
Yeah, good points.
Yeah, and that's where training is important too, right, Duncan? You can't just add data to the workflow and assume that everybody's going to be an objective and intelligent interpreter of that, right? If your boss sees that your staffing is way over the industry benchmark and that you're paying, he'll say, "Oh, we should cut our staff because we have more than the industry. We should be able to do this more efficiently." But then you have to consider the bigger picture, right? Are you in an engineering field that does require more staff? Because I'm not an expert in this vertical, but maybe it takes more staff to put together bridges than it does houses, right? So you just have to consider all of those little nuances about your business before jumping to conclusions based on benchmarking. And of course, it's helpful. Like more data, I'm always in favor that people should have more data in their decision making, but you just needs that training, needs that comprehension of understanding how to use it and how much to weigh it in your decision making.
Well,
If you put
data
it that
is
way, I would be terrified of having it in my factory if I was a manager, because my boss and my boss's boss might look at benchmarking data and come to completely inappropriate conclusions
Right.
about how effective we really were.
Yeah, well, data's king, right? We're all talking about how we need data, and so we want to know how we're going to use this benchmarking data, and then how's it brought in, how's it filtered through the system, and then how is it used? I think, like Duncan, you said something really interesting there. So we all want data, we want it to be used, but then how's AI going to use it as well, and how's it going to play a role with that?
I mean, if you are looking at the Vantagepoint product, it's becoming quite clear. So it's the data, the benchmarking data is to be used to identify where I'm lagging behind my industry so that I can improve. So this is what it's about. Could have been said.
Do we know the quality of that historical data, Sam?
Yeah, I mean, they are pretty good, to be completely honest. They have been known. I mean, I think they sort of own the whole CPQ process in the government space. They own the compliance process, the data compliance that they have. So they own a lot, and they have big clout in the space. So obviously their data is going to be one of the most trustworthy that you can find. Yeah, so it's pretty good, is what I'm gonna say.
Yeah, limited to their industries that they are working in. It's basically, if I'm right, it's project management heavy industries. And
sorry,
they are in that business for more than just a few years, so their database should be quite good. That should be quite good. And with that, it helps identify where you are weak and where you are strong, and work on both. So stay strong and get stronger.
Great.
And just one more thought on the benchmarks, because we share benchmarks with our clients too through our diagnostics. And What I notice is that clients usually, once you start getting historical data on them, that's the more important thing, right? How have we improved across certain metrics as opposed to how do we compare against the industry? So it's sort of like when you start tracking, the comparison against the industry is more important. But once you have your own historical data on your own company's performance over time, that's obviously the more relevant thing.
Yeah.
Good point. Any questions we have coming through the comments, Sam, that we need to address?
No, I think we are good. We can probably move to the next slide. We can probably do one more. I don't think we have anything meaningful there, so we'll just skip the comments. Okay, so we'll do one more probably. Robert, do you want to take the lead?
Yeah, and I know that you know a lot about IFS as well, and significant company adding HR, payroll, workforce management into their with their partnership with UKG. So I mean, we've been talking about capabilities, and we've been talking about how that you have partnerships, and what do we all think? Does this bring significant value? Did IFS have something similar into their wheelhouse that this is a needed partnership, or is this something that is just strengthens what they already have?
Yeah, so guys, I'll provide some context here. And IFS is they are primarily in the service space, even though obviously they are going to argue that they are probably in the product space as well. But for the most part, their market share is really in the service space. And the ERP offering generally for service and product space, they differ. And now when you talk about the service space, then you have competitors such as your Oracle, Workday, they probably Unit 4 as well, but I don't know if IFS really competes with Unit 4, to be completely honest. So the offering is very different. And in these spaces, the ACM offerings, the HR offerings matters because people are sort of the secret sauce of these companies. So now IFS does not necessarily have the ACM play. So now either they have to align it with somebody. So for example, let's say if you look at Dayforce, Dayforce is very well aligned with Microsoft, even though these two are completely different companies, but they go to market sort of together and they are very closely integrated, recommended together. So now with IFS, I mean, they needed somebody, so UKG. Now, the problem with UKG is a very mid-market offering. IFS is also sort of mid-market, but they also have very large logos as well. So that's where I can sense a little misalignment there. But obviously, UKG is probably going up market as well. So that's why for them, it was a great fit. So I personally like the story the way this is, to be completely honest.
How are they bringing the technology together? Do you know?
So when you say
Good.
Technology together, like you mean, so UKG is the ACM offering, and this is the ERP offering. These two are completely different, right? So
I understand that. Yep.
So when you say technology together, do you mean how are they going to integrate from the technology perspective?
Just an API, or are they going to do something a little bit more embedded?
So for some spaces, for example, let's say if you look at construction, you require a lot more interconnectedness of these two platforms. The reason for that is because when you are going to get into scenarios such as your union reporting, in that the feed has to come to and there's a lot of back and forth in between. So it's not as easy as just the API integration. It's going to be a lot more than that. And that's why this alignment matters, for those industries. So again, I don't know how closely and deeply they are going to be integrated, but they need to be integrated, for these industries. In other industries, it might not be as much of an issue, but for the industries where you are going to require union reporting, etc., that's where I guess you would require tight alignment of both of these technologies.
I think it's also important to think about this as a go-to-market arrangement as much as a technology partnership. Obviously, they have to make the integration work eventually, but in the short term, you've got the reality where IFS is like a really, really European organization still. It has clients in North America, but UKG is going to help it to expand in North America. And there are always benefits when companies can work together and offer more complete solutions, even if they are just reselling each other. Again, and so there's a big advantage simply in cross-training the sales forces and allowing people to go to market more effectively. But I mean, I'm thinking back to my time at Deloitte, where we had a lot of partnerships with software vendors, and there are some situations where it can create customer value, but sometimes it can create vendor lock-in. You know, if your data is in IFS or your data is in UKG, and you want a similar solution, and that's the preferred partner, sometimes it can lock customers into relatively expensive arrangements that they might not choose if they weren't recommended by the vendor who they're working with more closely. But I think to lower expectations, it's more likely to be a cross-selling partnership initially more than it is a technology partnership.
That might very well be. I mean, there's some scope, and especially in the workforce management area, IFS is all. I mean, their history comes out of the FS part, which is field service, and their workforce management is a biggie, a real biggie. So,
and it fits into, like, it's part of the zeitgeist, doesn't it? Like, everybody's trying to do more with less. You know, we were going to talk about Rimini Street and T-Systems, but you know, again, people are looking for something that is more cost effective. They're looking to deal with fewer suppliers. They don't mind sacrificing quality for price if they are not in a very high growth market. You know? And so I think if you can have these integrations and they're properly secured, and they improve relationships, then they can be a win, even if they're quite modest.
I think you've been on the right track there when you said that IFS is a European company. Well, they are Swedish, so it's pretty European. UKG is North American, so there's quite some cross-pollination potential for it, at least. So if one wants to become stronger in the US market and the other stronger in the European markets, then there you got a very valid use case beyond deep technical integration.
Well, Sam, should we close, or any further comments from you or thoughts?
So we have some more comments from the audience, so we can probably cover them just for a second. I don't know, probably one. So we have one from Anders, and he's saying simply providing massive quantities of data is a hindrance, not a help when it's not being analyzed by someone with expertise and context, pushing generalized AI reports up to the C-level without. Yeah, I think everybody's probably going to agree with this comment. I don't know if you guys have any other comments here on this one.
No point in disagreeing.
I think a lot of it is about organizational culture. Actually, I was at one vendor's user meeting recently where one group of users was saying, hey, we want to be able to get more exports. We want to get more data out in our reports. And others were saying, I need to stop my colleagues running such big reports. We need to focus on the big picture. I think that's part of organizational culture.
Yeah. Go ahead, Thomas. Sorry.
And of the delivery of the product. I mean, that's where the industry experience comes in. So along with, I don't want to spend a gazillion on consultants making it fit for my purposes. So the fit for purposeness of those dashboards needs to be there. So this is really where Anders needs a thumbs up in what he said. So it's not about more data. It's not, what did we say in big data is what we said earlier. It's not about the lake of it, having all of it, but having it condensed and presented to the audience. Actually, it's about smart data. And that's the same that applies here.
Yeah, so Robert, I don't think we have any more time right now. I don't know if anybody's going to have meetings. So we might need to do a quick close today.
Yeah, let's do a quick close. Everybody can just go around with a closing thought. We'll start with, why don't you go ahead, Brian, and then we'll go around more there.
Yeah, we'll see who the next tech mogul to acquire a pro sports franchise is, and will he spend more than $6 billion on it? Joining, Mark Cuban selling his pro sports franchise, he's cashing in, but other tech moguls are getting in the game.
Yeah, we thought he bought low or bought high. Now where did that go? Right. Duncan?
I think that the tech industry has a habit of presenting any change as an advancement that is universally positive, and the value of it is self-evident. And that is not the case, because there are often unintended consequences and downsides to any change that you make. So especially in this market, we need to be much stronger at focusing on the real customer benefit that technologies are creating.
Yeah. Thomas?
Yes, I second the latter part of what you just said. But in addition, so we should try, and there as analysts especially, try to stay away from hype. So some of us are good at creating it. Some of us are even better at pushing it, at driving it. But a majority of our job actually in these times, especially in these times, is putting the foot on the brake actually when it comes to hype, asking for the value. And this is where we actually need to encourage our clients and our friends, our prospects into being more specific instead of more exuberant.
Good points. I like to see supply chain be a little bit more top of mind for some of the vendors. I think there's a lot of volatility with the tariffs and things that are going on, and building resiliency with the technology that we have out there. I think we're all talking about things of automating, minimal or minor tasks within these ERP systems or other systems. And I'd like to see some enhanced automation where it really makes a difference, where we can be more efficient and these companies can grow, because I think we're in for a rude awakening where we're going to see a lot of the things exposed with the economic growth not going the way we want, and where you can make some of that ground up is within the supply chain. So total different words there that was part of this show, but I'm hoping the future shows will kind of get into some of that mix, because I think the supply chain's a very important topic.
Yeah, and on future shows, I'm actually going to double down on Thomas's advice, and you are going to see a lot more action from my side in doing fake AI. I'll be doing a lot more of those stories. On that note, thanks everyone for tuning in. This was part of our Analysts Gone Wild, and we'll see you next Thursday.
See you.